Hi everybody, this is Gary dealing with Sentiment Timing, and this is our free technical video report for Wednesday, June 5th, 2019. I hope you guys are enjoying this volatility, and let's get started. So when we made the low on Monday, we got a pretty low sentiment reading. We ran right into some support levels, and from there we saw a pretty nice rally to the upside. So this is the beauty about when we're in a volatile market is you're going to get these big bounces, and from there you could either buy the bounce or you can wait for it to get to a particular zone and just short it. So this is this is the things with the sentiment readings that you get, where you get a heads up as far as whether to add to positions, when to add to them, and stuff like that. So I still have a third. I'm still holding on to my 29.42 short, but for a bunch of the new members, I started layering in. I still have a third to go, and I'll show you what's going on and where we think things are coming. But this is I'm going to leave this here if you guys want to pause it and read it. But this is what I was talking about, where what he put out with, can the stock market be predicted? And these are just some of the actual reports that we put out, and you could see for yourself exactly when these dates hit and when they were called. These are all in our in our regular members area, so you can verify all of them. But anyway, you can go back and read those. I'm not going to go through all this. But so our predictive analytics model, time wise, we are in a negative time period, intermediate term. Sentiment, we hit extreme bearish sentiment readings, not extreme, but we got down there, and that did cause a rally, and we had some bullish divergences as well as a fib retracement. The target, one of the targets that I was talking about from the 29.42, came very close to getting hit. So these are actually wrong right here. This is short-term bearish, intermediate-term bearish, and so is long-term. But anyway, let's go to where we were. So short-term, this is where we hit on Monday with the big move down. Right now, it got moved back to here real quick, and this is the piece that's actually up here, because we got a 97% bullish reading after yesterday's Fed-induced rally. So you can see how everybody got bearish, and I'll show you on the sentiment charts. Everybody got bearish, and then from here we had the gap up, and now everybody's bullish again. And these things, this is the short term move within the intermediate term, because right now we're still in this area right here where we're probably moved down to fear. But being that the short term sentiment has turned up, everybody's kind of looking at this, not sure what's going to happen. We're going to make an intermediate term low when all of a sudden we see sentiment all the way down and people capitulate. We get a number of a series of extreme bearish sentiment readings and the zeros, and from there, that's when we're going to know it's going to be some type of trading low. Now the kill zone and the black hole, this is all part of the equation for it. It goes down, bounces back up real fast, and then from there sucks everybody in and then drops again, and this cycle is going to repeat, and these kill zones drive people crazy because they get out at a short-term capitulation and then get in when there's extreme bullishness, but we're only doing a retracement. So these were the sentiment readings that we saw. Only we had a 5% and 8%. We didn't get any of the. This is a capitulation low right here, 0, 2, 0. But what happened with this big rally that we had, we actually hit a 90, I believe it was 93%. So now we're back up, sentiment readings back up here. And what I'm going to show you on the charts is that this is just a typical retracement. Look at what happened here before we collapsed. Look at what happened here. We had a big bounce right up into the 50-day moving average, came back down, Now look what happened. Bounced down, came a little bit above the 50-day moving average, and then came down again. Once we were below the 200, had another bounce back up, and look what we're doing right now. These are how these moves happen, and this is why so many people get caught on the wrong side. You can't take these little 2-3 day rallies and believe that everything is all right just because the CNBC and everybody wants you to buy in because they want to sell. So the thing is this, is that we're running into some this was the support zone. I've had this 2720 as a target from here, and my reasoning for that was that from the move from this low to this high, we did not even get a 38% retracement. So everybody was sucked in up here. So we got the 38% retracement, gap up, and this is what the bulls do best, is they move the markets in pre-market. And now what happens is you have these gaps that are underneath it. And right now we're running into resistance levels. This is the heavy resistance zone right here, going from 27.38 up to 28.38 up to 28.55. And even if they get above that, now you turn around and you say, okay, well, there's another resistance at 28.68. Then you have another bull bear line at 28.90. So the bulls have they have a lot of work to do right now. But we have, the thing is that what he was looking for, if I go back to the sentiment chart, is that he said he would really prefer that there be a one-day wonder to the upside to sell before a release down. He does not promise, but it may be a great if it happens. These are the dates that he's looking at. And what happened was we actually, the Fed news yesterday gave us this big move up, and now we have today that was a carry on to it. But again, this is a short squeeze right here as we get into the heavy resistance. This is the make or break line. If we get up here and the bears step in, most likely we're going to see the lows taken out again, and I believe we're heading down to that 26.50 level. But what the bears have to do first before we start assuming anything is they need to get it below this the 27.90. So this is the bull bear zone right here. It's going from the 28.04 to the 27.90. If the bulls lose this zone, most likely this is going to be taken out in a very fast manner, and we're going to come down to that 26.50. But you have to remember, when we get these 0% bullish sentiment readings, they're going to mark short-term bottoms, and this is the types of move that happens. So having that little, say, peek at how everybody is feeling allows you to sit there and manage your trades. And like I said, I've been holding my third because we are down here and it was a support level, and I did take one on it when we broke the lows here, but we got the gap up, but I also got the other short from up here. So we're just averaging in and we're waiting for the last third. And the reason why I didn't take mine today was that we have the jobs numbers coming up in the on Friday. We have the moving average that's right above it. So I'm going to wait and see how things play out from a technical view, because we don't have any bearish divergences yet. But the thing is, with these types of moves, these little reflex or cat bounces here, they don't come with bearish divergences. And what happens is everybody gets sucked in at the top, and from there they get whipped back down. So things are going as planned right now. We're in the beginning stages of this kill zone, but we're going to know once we get low sentiment readings and we're at support and there's some buy signals, you're going to know not to be jumping heavily on the short side. If anything, you want to be looking to cover and then wait for a bounce to head into the resistance and then reshort it again. And like I said, that's the beauty of of when we have a down move, is we get these 100-point moves to the upside, and you just sit back and wait to short them. And once we get the capitulation to the downside, then we look to buy, because when we get this 100-point bounce, everybody is going to be looking to short the market and wonder, where do I short it? And that's pretty much exactly what happened when we were down here, is that everybody was looking for where to short it, and the market never went down. So now what happens is we're now coming up, and people are looking, okay, if we break through this, we're going back to the upside. But this is going to suck them in before that. And then, like I said, we could come to the 26.50 and even down to the 25.76. So we're in in the beginning stages of this. I think it's going to be, some fun times coming. But knowing how people feel, the sentiment is one of the most important pieces of this, because we know the time-wise we're in the kill zone. So now it's going to move to, as far as with our predictive analytics model, it's going to be with the sentiment and the technicals, because once we run into the time period to start looking for a low, we're going to get 0% sentiment readings. We're going to get bullish divergences, and then you simply just look for a pivot to look to buy and put a stop in place, because sometimes you get stopped out of it. But once it makes that low, that's when you're looking 100, 200, 300 points to the upside once the low is in place. So again, we have some important dates that are approaching. We're in the beginning stages of this kill zone, and until we start seeing a series of these types of sentiment readings, where just like this bounce here, 93% retracement, 93% bullish sentiment reading, we got the same thing on this bounce right here, and it's probably going to go up a little bit more after today's move. So things are getting primed up for another move to the downside, and we're looking forward to it. And with that, good luck trading, and I'll talk to you guys next week.